फिफ्थ आ रहा है, अभी चालू कर दिया एकदम। मैं गलती से एडमोड ऊपर ले फिफ्थ लिख लो। Stay here. I'll be back. Stay. Bed, Rafi, bed. Go bed. Hey all, welcome to ShareTreck. Good morning. I hope everyone is doing well. Can see a few people have already joined. Good morning, Inf. The thesis for this morning is that despite the bounce we saw on Friday, there's a good chance that we may come down. I'm going to keep it very short. I think overall, the environment in which the market is operating is very messy, unpredictable, and for anyone to put a lot of money and expect it to grow, the risk factor is very high. So most people are likely to shy. The second thing is that mutual funds have very less cash in their hand, so they are not going to be buyers. If anything, they might end up being sellers. And apart from that, the other thing I would like to say is, over the weekend I've been reading about the Warren Buffett indicator. And there are times when the stock market value, when it goes higher than the GDP, significantly higher. I think right now it is 1.5 times our US GDP. In those kind of circumstances, the market is ripe for losing a little bit of value and come down and match with the Main Street. So those are the concepts that I have in mind, which makes me feel that we have probably not seen the end of all the jumps. And the morning's weakness to a certain extent is right now because we are awaiting the inflation data. And if we look at the economic calendar, around 8:30, we are going to get retail sales month-over-month data and other retail sales information, the US Treasury, 10-year Treasury yield is going down, which means that people are finding much more comfort in the bonds, and they're waiting and watching what's happening. If the inflation rate goes up, then the bonds will go up. So probably there's people who maybe on Friday or something went into bonds are now trying to get back out. So as we know, demand and supply, when the demand for something goes up and the supply is constant, then the prices tend to go up for that item. And conversely, when the demand is less and the supply remains constant, the price of that item goes down. So those kind of relationships exist for bonds as well. So whatever movement we see here in the bond is a reaction of the market to what could potentially be revealed in the retail sales. Now, in this headlines out here, one of the things that we had to keep an eye on is Canada. Of course, Canada is not that big an economy to make a difference, but I think at this point of time, what I see in Canada is that sourcing other sources other than US for our food and other things is taking place. Our Prime Minister is in Europe at this point of time, and probably we may end up getting more European goods here as compared to the US goods that we have right now. And once that happens, that could be a lasting effect, and that also will have some amount of impact on the US market, because there will be companies which were dedicated to exporting to Canada. They might have to lay off people and reduce the capacity. I'm not saying that Canada can destabilize the US market, but I'm saying the effect cannot be something that can be totally ignored. It's going to amount to something or the other. Then we have seen this protectionist move coming up by European Airbus and other calls for sovereign fund and higher Europe tech autonomy. So these are the only things that are going to happen going forward, and that's not good for the investor, because our markets gets fragmented, efficiency goes down, productivity goes down, and innovation also goes down because of protectionism. Now look at this other headline: Tesla gets a price target cut from Mizuho, which warns of softening EV sales. And there have been reports from various other people also going negative on Tesla. And there's a viral video out there from Mark Rober, who is of the fame of, glitter bombs for porch thieves and all. He did a YouTube video about Tesla, where Tesla gets cheated by that Wile E. Coyote kind of wall. They created a styrofoam wall and put a photograph of the background into it, so that unless you're a human, you won't be able to distinguish between the fact that the road has been barricaded with a styrofoam wall, which is coated with a picture of the background. So I saw that video, and you see Tesla going right through it, smashing through that styrofoam wall. But there is a little bit of controversy whether the footage is genuine or not. So I wouldn't like to comment about that. But basically what I'm saying is that the negative press for Tesla is way more than the positive press. So that's definitely bound to have an impact on the Tesla stock sooner rather than later. I have sold my Tesla shorts already. I sold it on Friday because I was getting a bit jittery, and I said I can't take this risk. But I may think of entering it back again today, looking at how the market goes. So those are some of the things that I wanted to talk about. And before I proceed to the technical analysis, I want to pay homage to Hudson Bay Company. Hudson Bay Company is an iconic Canadian company which has got a history older than Canada itself. And unfortunately, many years ago, private venture capitalists from US took over the company, and then they stripped it of its real estate. It had high premium real estate across the country, including in downtown Toronto. So the first step they did was they stripped off the real estate, sold it off, took the money, and then Hudson Bay itself became a tenant for the same property that it used to own earlier. And over a period of time, things started deteriorating, and finally now we have a situation where Hudson Bay is declaring bankruptcy, and it's a very sad situation. But Canada allows for takeover of companies and other things. We have lost a lot of Canadian companies, and it's HBC. Yeah, it's called HBC, Hudson Bay Company. So I just wanted to express my sadness that an iconic Canadian landmark is gone, and that's the price for capitalism. Now let's move on to the TradingView platform and look at the futures. The futures are down 0.75 to 2.25. I remember looking at the Nasdaq futures and the S&P 500 futures late last night, and it was very negative. And this morning, it has been fluctuating between positive and negative, trying to make up its mind. But I'm going to take a look at the chart out here and give you my feelings. I think that the first resistance that we have is out here at 19,739. So if you are not able to cross 19,739, we are going to bounce back down, and then we'll get a support out here at 19,549. So today we could potentially see rebounding between these two extremes, or these two boundaries. And if we manage to break down further, then we have this diagonal line of support that's going to give us a support. And if we manage to break on the upside, then we have a resistance at 20,048, which will probably push us down. I'm going to mark this as a resistance so that we can see it clearly. So those are the two extremes that I am seeing for today. And by around 8:30, we'll see the retail sales data. That could give the market some idea of which side it has to move. So this is what I am thinking for Nasdaq. And then CU Inf buy. Then we have got S&P 500, which has got resistance somewhere around 5,639. And this resistance can push it down. But if we break through from this resistance, then we have the next resistance, which is at 5,680.25. Pre-market, I think, I wouldn't say pre-market, market is already open for S&P 500 futures, and we are down 0.16%. But let me remind you, we were down much more earlier when the market opened, but now we have improved a lot. So I'm thinking that even if we get a bounce today, there are a lot of resistances to push us back down. We are still in the bear channel at this point of time, and we need to see a bunch of higher lows and higher highs before we can say that we are out of this downturn out here. In the past, we have had pullback or correction of around 10% or slightly higher than 10%, and we have gone back up, except for the time of COVID. I think that at this point of time, we have extraneous factors way more than what we had before. Extraneous factors like tariff uncertainty, and also geopolitical tension that is being ratcheted up by talks of takeover of Canada and Greenland and all those things, and also the impending meeting on Tuesday between Putin and Trump to talk about division of territories and things like that. So it's fraught with a lot of other risks. So I'm thinking that this time could be different from the recent past, where after a correction of over 10%, we have always been able to bounce back up. I think this time around it's slightly different. We'll wait and watch. I may be wrong, but I am thinking that further downside is still in order. If you look at dollar index, the dollar index shows that dollar is weakening a little bit, but we have tremendous support for dollar somewhere around the 103.27 region. So I'm thinking it will eventually bounce back from there, unless we get some bad news. And if you look at the 10-year yields, the 10-year yields are coming down, but they are in a bear channel out here, and we are kind of attempting to create a bull channel. We have had higher lows and higher highs, but we need to break through this diagonal line of resistance. And once we do that and we demonstrate that we are staying on top of this green diagonal line, which is a bullish channel, then I would say that the yields will start going up. And if that happens, it's not great for the US government, because they have to refinance their treasuries, and they'll be refinancing it at a higher price. And then their debt servicing cost, which is almost $1 trillion, is going to go up further. So with that said, let's go and have a look at the indicators themselves. S&P 500, where we left it last, it's looking at touching this resistance out here, which happens to be at 5,659, and then coming back down to test this diagonal line of support. I would say this is going to be a support right now because we are above it. So we have a chance of bouncing back between these two until we break out above or we break out below. That's where I would like to leave it. And then if you look at Nasdaq, I think we are right on top of a resistance of 19,700. In fact, we are just above it as far as Friday close is concerned. And if we remember what we saw in our futures was already below that. So we'll have to wait and see what happens when the market opens. And I'm thinking that any gain that happens is going to be given up when it meets the resistance. Then we look at VIX. VIX is up 1.16%. When VIX goes up, the market goes down. So VIX is moving in that direction, which indicates that probably markets might go down. Dow Jones was up 1.65 when we ended yesterday, but if other indicators show that market is going down, Dow Jones will also follow in the same direction. You look at put call ratio and it's at 0.97, which is very neutral. And if we look at gold is up another 0.48%. It's at 2,998, going back towards the 3,000 that it touched briefly earlier. So we may see gold touch 3,000, but it could come back down again and bounce off another support. And the support is at 2,954. So I'm going to mark that as a support. So you will see a zigzag movement upward for gold. But I'm thinking that in the long term, gold is definitely going beyond 3,000 because of the fiscal condition of United States and the geopolitical risks that seem to be brewing up. And now let me go on and look at the genomics, or let's go with AI first. So if you look at NVIDIA is up 1.59% in pre-market trades. It has broken past this diagonal line of resistance that we had before, and it broke past it on Friday, and it's become a support now. And then we have also broken past the 9-day and the 200-day exponential. So NVIDIA is looking very strong. Momentum is almost at average. So I think with pre-market action the way it is, we have got a bullish MACD coming up, and we also got above average. So I would definitely do a little bit of buying of NVIDIA today if I get the chance. And we don't have any headwinds until we reach a resistance of 126.20. So it could go up further from there. And we have this diagonal line of resistance, which was kind of a bear channel. I think I'll draw it out here roughly. And the aberration was the movement that we saw somewhere around the 27th of February. But now we are way past it. And I think NVIDIA is doing an orderly move up. And that in turn is going to support other Mag 5 companies. Meta is up 0.16%, but it's still within this diagonal line of resistance. So I have to see it break through above that. Google is down 0.10%. Google is looking very attractive. I'd like to pick up a little more Google today, dollar cost averaging. And then we look at Amazon. Amazon is up 0.38%. It's exactly above this diagonal line of resistance that we had drawn before. So I'm thinking that Amazon also is starting to look good, but it needs MACD and momentum to improve a lot. But as I mentioned, if we go up, we are going to hit some resistance and then come back down again. And for us, the resistance out here is a 200-day exponential sitting at 201.24, which is this line that you see here, this white line. Then you look at Apple. Apple is down 0.32%. I think Apple is pretty weak. And if it meets any resistance, it's going to be pushed back by the resistance. And the resistance today is going to be at around 213.45. Right now, pre-market, it's at 212.80. Then look at Microsoft. Microsoft is down 0.72%. It's still within this bear channel. So we'll have to see what happens when it hits the resistance out here and gets pushed down. Tesla is down 0.87%. It's above this diagonal line of resistance. I was planning to short, but I didn't have the nerve to do it, but I'll do that today. I think there is a lot of resistance for Tesla. Tesla has a resistance at 250.21. And then we have this diagonal line of resistance, which has now become a diagonal line of support for Tesla. But it can travel down along the line of support. And it has also got a support at 241.74. So I'm going to mark that as a support as well. So those are the immediate supports. And the immediate resistance is already declared. And the next resistance for it is 255.72. So I'm thinking that even if Tesla bounces a little bit, it's bound to come down. Pre-market already shows that it is coming down. So I'm going to look at a bit of a short here just for a little bit of money. Oracle is up 0.36, but well within the diagonal line of resistance. So it will bounce down as soon as it hits any resistance. And we have AMD, which is up 1.17%. Again, I'm contemplating shorting AMD because it's very richly valued. And I think that we have this diagonal line of resistance which has been breached. The diagonal resistance for today would have been 101.33. We are at 102.11. So obviously we have breached this. So our next resistance is going to be the 9-day exponential, which is this yellowish line that comes out here. It's at 103.49. And once we reach that level, I think we'll be pushed back down again. MACD is really good, but momentum needs a lot of improvement. Intel is up 1.33% in pre-market trades, and MACD is looking bearish, but it's improving significantly. Momentum has also picked up, so Intel could have a little bit more gains before it hits the 200-day exponential, which is sitting at 24.7 for this white line out here. So that's what I have there for you guys. And SMCI is up 0.33%, riding this diagonal line of support, but it's going to hit the resistance, which is at 42.80. Right now we are at 42.34. If it doesn't break through 42.80, it will come back and test the diagonal line of support. That's my verdict. And it's also possible that it may test the 9-day exponential, which is sitting at 41.21 before going down further. Qualcomm is down 0.66%, clearly above the diagonal line of support. This is a resistance which has now become a support. It has a potential of riding this support on the way back down, but it has also got the potential to go all the way up to 158.44 and then be pushed down again. MACD is not looking great. Momentum is also not looking great. Broadcom is up 0.02%. It's above this diagonal line of support, and it has got an immediate resistance at 198.64 from where it can bounce down again. Palantir, high PE, I'm very worried about this stock. I wouldn't touch it. It's got a gain of 2.09% in pre-market trades. It's above a resistance of 83.68. I'm going to mark this resistance as a support. And we have a resistance at 87.82. Right now we are at 87.97. So we are just above the resistance of the 9-day exponential. So I think Palantir can go up a little bit, but if the overall market comes down, Palantir will follow suit with it. So that said, I want to look at JD.com, and it's up 0.97%, and it has got a resistance out here at 43.59. I'm looking at this because I have JD.com a little bit in the red, and if I get an opportunity, I'm going to sell it and I'm going to get out of it. That was a thoughtless purchase on my part, so I'm paying for it, but I'm going to get out from there as soon as possible. Now, having done that, I'm going to look at our genomics. Verve Therapeutics is flat in pre-market trades, and it has got a resistance at 6.71, so I'm going to mark that red. It has also got a resistance at 6.63, which is this 9-day exponential. MACD, momentum, both are looking weak, and if it comes down, it has got a support out here. This diagonal line of support, which is this green line that you see out here. And then Ginkgo Bioworks is up 0.57%. It's in a bear channel, and it's got a minor resistance out here. I'm going to draw this out. I'll mark this red, and that's the resistance which will push it down. Caribou is up 1.98%, still within this bear channel. It's going to come back down again. CRISPR Therapeutics is down 0.05%, and it's got this minor line of support out here which will help it before it goes down. So if it manages to bounce back from here, then the resistance is going to be at 42.84. And then we have Grail, which is down 0.67%. It's still in this diagonal line of resistance. It's in a bear channel. Prime has got no trades pre-market. Beam has it's gone down 0.95% in pre-market trades. It still has got resistance out here at 25.10. MACD, momentum, both are looking weak. So overall, I'm thinking that genomics is looking weak. If there's a dead cat bounce and the market goes down, genomics will follow suit. Let's look at Illumina. Illumina is flat in pre-market trade. It was up 1.84% in previous trades. Again, I think that on the upper side it's bounded by 89.27, and on the lower side it's bounded by 80.63, and it's going to be between these two. MACD is good, but momentum has a lot of improvement to be desired. Vertex is continuing to ride the diagonal line of support. It's still on a bull channel. It's doing extremely well. Pre-market, it's down 0.68%, but not too worried about it because MACD momentum, both are looking pretty good. It's going to consolidate, move sideways, come back and hit this diagonal line of support and then go up. So I'm not too much worried about this either. Now, having said that, I want to look at the currencies. So let's go to currencies. I'm looking at Bitcoin, US dollar. Bitcoin is picking up a little bit. It's up 1.01%. It's at 83,405. It has got a potential to move up until it encounters the 200-day exponential, which is sitting at 85,535. And that's one point where it could be pushed down. Then it also has a resistance from the 9-day exponential, which is at 85,979.05. Both of these have a capability of pushing it down, and also Bitcoin will follow S&P 500. So if S&P 500 goes down, Bitcoin is going to go down. That's my estimation. And then of course Ethereum is also simpatico with Bitcoin and it's moving up. The same thing I will say for Ethereum as well. You got this move down, sideways, and then up and then down, move sideways, down, and then sideways. So there could be a little bit of up and then it will come down. That's what I'm thinking for Ethereum as well. So friends, that's the overall story today. And if there is no questions or any interaction, I'm inclined to shut down the live stream and then go back into breakfast. That's what I want to do next. So let me see if there's any questions. If not, I'd like to go back. Okay then guys, that's all for today. So just to conclude, what I would say is that we're going to go up a little bit in some counters, meet resistance and then come down. Overall trend is downwards because there is too much of mess outside of the market, and also the market is more than 1.5 times the size of the GDP. So something has got to give, and I think the prices can come down. With that, my friends, I'd like to end this video here. I'll catch up with you again in the next video. Bye for now.